From Currals, here is our top 10 tax-saving tips for small business. Start now. Failure to do timely tax planning well before your year end can lead to mistakes and lost opportunities, which could cost you money. Keep your books and records up to date. The HMRC commonly reject expense deductions if there isn't appropriate supporting documentation. Review your business classification. Sole traders may consider the tax benefits of conducting their business through a limited company. Sole traders commonly pay higher tax rates than owners of limited companies, and there are a broader range of allowances and reliefs available to reduce taxable profits of a limited company. Pay yourself efficiently. If you own a limited company, you may benefit from paying yourself a small salary to take advantage of your personal allowance and then taking other profits from the business as dividends. You can also consider paying your family members a reasonable salary for the work that they do for the business, taking advantage of their personal allowances. Pension contributions. Take advantage of the opportunity to pay into a company pension scheme. The cost is deductible for corporation tax, and there's no income tax or national insurance contribution to pay, subject to the annual and lifetime allowances. Reliefs and expense deductions. This is a complex area, but these reliefs are there to be used, so don't leave opportunities unclaimed. Expenses relating to running the business can be claimed as a tax deduction, and if you work from home, this includes a reasonable allocation of household expenses. Capital allowances can be claimed for major expenditures on equipment or research and development. Consider the flat rate VAT scheme. VAT is normally paid on sales and claimed on expenses. But if the turnover of your business is less than £150,000 a year, you could benefit from registering for the flat rate VAT scheme. Under the scheme, you simply pay the HMRC at a flat rate on sales and claim no VAT on expenses. The flat rate is dependent on the industry in which your business operates. Depending on your circumstances, this could save you money. Consider voluntary VAT registration. If your revenues are lower than £85,000 a year, you don't have to register for VAT, but it may be in your interests to register voluntarily, especially if your sales are to VAT-registered businesses. By registering, you can make a saving by claiming VAT on your business expenses, and if your customers are VAT-registered, the VAT you charge them on sales won't cost them anything. Consider cash accounting for VAT. Under the cash accounting scheme, you only pay VAT to HMRC after you have collected from customers instead of after you raise an invoice. This scheme can greatly improve your business's cash flow and is available to companies with an annual turnover of less than £1.35 million. Timing of revenues and costs. Around your year end, you could take actions that will allow you to realise a cash flow benefit related to payment of tax. You can do this by delaying completion of a sale until the next financial year or accelerating major purchases into the current year. But remember, the timing of revenues is based on when a sale is completed, not when it's invoiced. If you expect tax rates to increase in the following year, you may want to do the reverse and accelerate revenues into the current year and delay expenses until the next year. Tax-free benefits for employees. This is sometimes overlooked, but there are many opportunities to grant benefits to your employees on a tax-free basis. For example, issuing company mobile phones to employees, or providing employees childcare which has been directly contracted by the company. These benefits don't incur income taxes or national insurance, subject to certain limits and conditions. Don't forget a Christmas party. That's tax-free benefit too, up to £150 per head. And there are schemes allowing employers to grant a cash award to employees for cost-saving suggestions. Tax planning can be complex, and the rules are ever-changing. We recommend that you consult a qualified accountant to decide what is right for you. At Currals, we would be happy to help you. Please give us a call or send us an email.